Asia Pacific is emerging as a leader in digital stickiness, with finance app sessions surging 50% as marketers shift from acquisition to AI-led optimization. Here to discuss the shift are Holly Fang of the Singapore Fintech Association and Suchit Huria of Adjust. Holly, Suchit, thanks for joining us. What is driving APAC's surge in finance app sessions?
So I think this has a lot to do with how many APAC markets evolved when it comes to banking and digital asset access. A lot of the countries in Asia, including Southeast Asia, China, and India, moved directly from cash-based economies into mobile-first financial ecosystems, skipping the PC era and traditional desktop banking entirely. And combine that with widespread smartphone adoption, affordable internet, mobile quickly became the primary interface for how people access not just financial services, but for their daily lives. At the same time, we also saw the rise of super apps like WeChat, Grab, and Gojek. They've all embedded payments and financial services directly into everyday journeys. So whether it's transport or food delivery, e-commerce, and all of this really help to drive up engagement and user frequency. And the last thing is also, I think, collectively as governments, the development of national payment infrastructures like QR payments, real-time payment systems, along with very strong government-led digitalization efforts such as UPI in India. So I think with all of that combined, mobile for now is the default mode of access to financial services for many of us in this part of the world.
Sure. So what we are seeing across APAC region is that finance apps usage and competition in this category both are growing at a very rapid pace. According to our mobile app trends report from the APAC region, app installs in finance category grew by 5% year on year, while sessions increased significantly by 50%. Users are using these apps in multiple ways, be it daily payments, banking, managing personal financing, etc. While users are returning to finance apps more in the APAC region, session lengths slightly declined. It was 7.07 minutes in 2024, and it went down to 6.94 minutes in 2025. What this change means for app owners is that they need to have a good long-term retention strategy along with the user acquisition strategy. And that can only be achieved by delivering frictionless user experiences, personalized services, which ensures their users keep coming back to their app.
Suchit, what does deeper mobile stickiness mean for data traffic and ARPU growth?
Sure. So from a KPI perspective, stickiness is measured on how many daily active users you have in relative to the monthly active users. Deeper mobile stickiness refers to users spending more time and return more frequently to these apps. In APAC, this particular behavior is very evident in two categories, finance and e-commerce. Let me tell you by an example. For example, in banking as a category, you might be using a banking app in the morning to see your balance, and then use the same app for paying your bill on a monthly bill or a lunch bill or a dinner bill in the evening. In terms of ARPU, which basically means average revenue generated per user, higher engagement typically signals more revenue potential. More sticky users tend to have higher LTV than other users. LTV basically means higher lifetime value.
And Holly, how about for fintech, particularly in user engagement?
So I think for apps, right now here, they're beyond being used for any specific or single point purposes or being used occasionally. They are now effectively part of daily routine, which means then that there's a significant increase in the interaction frequency with the use of all these apps. They're open it more often, triggering a lot of real-time activities like payments, checking of balances, notifications, and that creates this cycle of richer and more continuous data flows. And then the second is monetization. Higher engagement naturally leads to stronger ARPU. Users, they trust you and they use you more regularly. It also means that they are more likely to adopt other services, whether it's credit, insurance, wealth products. And this also means generally higher transaction volumes. And lastly, it's engagement. The app becomes part of your daily habit. Users are using it not just to transact, but also managing their financial lives within that platform, which further deepens loyalty.
So, Chit, how should telecom operators respond to rising multi-platform user behavior?
Great question. So telecom operators need to now move beyond siloed views of user engagement. They have to start understanding that full multi-platform user journey where the user shifts seamlessly between apps, services, and various digital touchpoints. In this environment, visibility becomes the biggest challenge. And this is where measurement platforms and attribution platforms like Adjust play a very critical role for telcos. We help telcos and digital businesses unify fragmented data signals, understand cross platform behaviors, and help them make informed decisions. User measurement tools with AI driven insights, operators can now make better marketing and engagement strategies and also design better relevant offerings for their users.
And for Holly, how about for fintech platforms? How should they respond to rising multi-platform user behavior, and what does this mean for integrated payment and financial service ecosystems?
So in general, and I think we're observing this shift already. Fintechs are moving away from applications based towards solutions based, even more towards integrated solutions and an ecosystem play. Um, Today as a consumer, as a user, we engage with so many different apps for various purposes, including online shopping, messaging, keeping up with friends, travel, health apps. And what fintechs are trying to do is to meet where the users are. So this helps to drive actually a shift towards embedded finance and API-led partnerships, where all these platforms providing these services, these essential services to everyone, they work very closely with fintechs, with banks to embed and integrate financial services underneath so that there is a complete and seamless experience for the customers. And I think fintechs, generally, we are fast adopters and responsible innovators also of AI technology. So now, we hear a lot about agentic AI in financial services, agentic checkout, AI agents for wealth planning. Some of these personalized services are actually already being made available to customers across various touch points. And all the while, of course, maintaining very high standards of safety, security, privacy, as expected when you're touching funds and money.
Holly and Suchit, thank you both for sharing your thoughts with us.
Thank you. Thanks for having me.
Thank you. Have a good day.
Those were Holly Fang, president of the Singapore FinTech Association, and Suchit Huria, senior growth lead for India and Southeast Asia at Adjust. For more news, visit asiantelecom.com.